And on Wall Street, the markets opened to a slightly higher open, with investors gearing up for a slew of earnings results, on top of being on the lookout for new data and comments from leading Fed members. Major U.S. companies are set to release their latest earnings today, with Disney, Office Depot, SeaWorld and News Corp expected to keep investors on their toes. But let's look at the numbers now, and we'll start with the Dow Jones, which is pointing to a higher open. The S&P 500 isn't changed, though, at 2,399.38, while the Nasdaq also looks higher. And Asian equities were subdued today after soaring in the previous trading session, with investors focused on key regional events unfolding today. And of course, that includes a presidential election in South Korea and the release of the Australian federal budget. Markets in South Korea closed today for the election. In Japan, the Nikkei 225 closed 0.26% lower at 19,843 after a subdued trading session. Hong Kong's Hang Seng Index rose 1.03%. Markets on the mainland were also in the green after marking losses earlier in the session, with the Shanghai Composite gaining 0.06% and the Shenzhen Composite adding 0.65%. In Hong Kong, the suspension in the trade of China Hushin Dairy Holding shares was extended by regulators, and shares of the troubled company plunged 85% in March this year. The Australian benchmark index declined 0.53% to close at 5,839.9. Away from the markets now, the International Monetary Fund has launched its Regional Economic Outlook for Sub-Saharan Africa today in Abuja, Nigeria's federal capital. The IMF says in the report that the region's growth fell to just 1.4% last year, and that's its slowest in more than 2 decades. And the recovery is expected to be modest, with an expansion of just 2.6% this year. The report mentions that only a few countries such as Senegal and Kenya are expected to enjoy a high growth rate of 6% or more this year. The region's 2 biggest economies, that is Nigeria and South Africa, are forecast to grow just 0.8% this year, meaning that per capita incomes will decline for the 2nd consecutive year. And this forecast was issued before South Africa's credit rating was relegated to junk status by 2 ratings agencies last month.
We are, of course, very worried about the largest economies in the region, Nigeria, Angola, South Africa, growing as slow as they are right now, and also, particularly in the case of Angola and Nigeria, facing significant macroeconomic imbalances. I mean, we need these 3 economies to be growing, rapidly for the regional output to be where it needs to be. So, it's an issue of concern. We're somewhat relieved that growth has started to pick up, but a lot more needs to be done in Nigeria and Angola, particularly in the macroeconomic environment as I laid out. The other countries, it's more kind of fine-tuning policies. The countries that are growing rapidly, the ones you mentioned, like Kenya, Tanzania, Senegal, Cote d'Ivoire, there it's really a bit more about fine-tuning policies to make sure that they avoid slowing down, or worse still, seeing an unsustainable debt build-up. So it's making sure that you adjust policies there. In Ghana, they already were hit by of course, macroeconomic imbalances a couple of years ago, and have been looking
for support. So it looks like this is spreading across the West Coast. Do you think this is a source of worry at any point in time?
I think the situation in each of the countries that you mentioned is a bit different. In the case of Cameroon, of course, it is in the CEMAC region. 5 of the 6 countries in the CEMAC Monetary Union are oil exporters, and they too have been hit very much by the decline in commodity prices. So those countries are moving towards, have requested and, for IMF support of their program. So it's in that context that we're supporting them. But, again, going back a little bit to the question that you raised earlier about, having a healthy Nigeria, Angola, South Africa for the region, it is partly also, of course, because of the spillovers that these countries have on the rest of the region, right? I mean, without these 3 large economies doing well, the neighbors, but even the broader region cannot do well, and there can be adverse spillovers. So this again is another reason why getting growth going back again here in these countries is going to be important.
Well, in terms of outlook, this report speaks to the fact that yes, commodity prices are rebounding, as we've seen towards the end of last year. But the report says, well, it's not strong enough to get Sub-Saharan Africa back on track where perhaps the IMF would want to see it. So where does that leave the SSA if the commodities rebound is not good enough? What should they do beyond oil? Beyond commodity prices?
Okay, so a couple of things here. First and foremost, commodity is an important story. I mean, oil or hard metals is really a very important story in about 15 out of, say, the 45 sub-Saharan African countries. In much of the rest of the region, the exports are much more diversified and so have not been impacted directly by commodity prices. So, the travails of commodity prices really are impacting these 15 countries for the most part. The other countries, it tends to affect more negatively because when commodity prices are high, those are affected negatively. So, sub-Saharan Africa is not a commodity story. The whole of sub-Saharan Africa is not a commodity story. That's the first point. Second, even in the commodity exporting countries, the whole point is to avoid being so reliant on commodity prices, right? So the idea is to have more diversified economies. So even if it were the case that commodity prices were to recover, you definitely don't want to be focusing economic policies in that direction or relying that excessively. In any event, commodity prices going forward are not expected to recover. All projections show basically, for example, oil prices staying at their current levels in the $50 range going forward. So it's not something which can be seen as a driver of these economies or something that will give breathing space to do more reforms going forward. So really, I think we all have to work on the basis that going forward, if commodity prices rise, that's well and good. But really, we have to assume very prudent and conservative price levels going forward and do reforms accordingly.
In terms of growth generally across the region, to wrap up this conversation, what are the figures you're looking at in the medium to long term? Of course, the short-term projections are out, 2017, 2018, but if we're moving around a 4-year, 5-year period, what's the outlook from the IMF?
Okay, so, much will depend really on the steps, the policies that are taken in this period now. That's what's going to be laying the basis for growth recovering to the 5-6% range that the region has. We are projecting, growth, as I said, last year was only 1.5%. It's going up to around 2.5% and going up to just over 3% next year. And really, depending on whether countries, address the challenges that they're facing on the macro area, particularly in countries like Nigeria, we see, we're expecting that the, ARGP will be implemented to the fullest extent, laying the basis for stronger growth. So we should, over the medium term, see a recovery in growth.
Well, that was an exclusive interview with Channel's business editor Bosun Omofai by the head of African development at the IMF, Selassie Abebe Amero Selassie, who is calling for collective efforts and policies to achieve a healthy growth in the sub-Saharan economy. Well, Business Incorporated will be right back. Please stay with us.